Good afternoon. Today is Tuesday, January the 17th, and the first trading day for Americans. And we all know yesterday American markets were closed for the Martin Luther King Jr. Birthday holidays. Okay, so this is the first public holiday for United States other than the New Year Day celebration. So you can see overnight the market has been pretty tame. There was obviously no trading in the US markets. So as far as the Dow Jones is concerned, we can see that on Friday itself the market actually extended higher based on the very good number coming out for the CPI numbers that was released last Thursday. So the number was actually lower than expected, giving rise to the expectation among market participants that the Federal Reserve now have all the reason to go slow on the interest rate hikes. Okay, so the next interest rate hike will not be due until February the 1st. So the market has already priced in at least a 0.25% increase or 25 basis point rate hike for February the 1st during the first FOMC for this year. Now, going forward, more importantly, people will be trying to find out what the Federal Reserve thinks after the Fed hike is done, and we want to see the language they use as to know what is their message for us in the longer term for the rest of 2023. Now, if the last FOMC meeting is any guide, the Federal Reserve Chairman is likely to maintain telling us that interest rate is going to stay higher for longer. That means to say that unless something major happen, there is really no chance that the Federal Reserve will look to cut rates. Everybody is hoping for a pivot, and I think this trust in betting against the Federal Reserve, thinking that they will be forced to pivot, may be a little bit premature for now. The danger period going forward for this particular month, I think, will be next Monday. Okay, so next Monday, I do expect some kind of big move happening in equity markets. It may actually cause an unraveling of prices. So do go forward and be very careful. Do not chase this market ever higher. I have this sixth sense that market is not going to do well come next Monday. Okay, so do be very careful. This is just my opinion. You can see the price chart and then make your own decision. Okay, in the S&P 500, we can see the prices has also rallied quite significantly. On Friday, the market actually broke the a round number at 4,000. Market actually traded to a high of almost 4,004 points. Now, a lot of people and analysts were looking at 4,000, saying that if the market can cross 3,995, it's going to be setting a bullish tone, but I have a different idea. I don't think this 4,000 points is of any value to me, because yes, it's a round number, no doubt, but there is no significance as far as I'm concerned. There's no chart point. They say 4,000 is going to be a key level to watch. So now the price has actually gone beyond that. So if the market causes everybody to get excited and rush in to buy, then I will be waiting on the wing to hope that the price continue to go higher. So because I have every intention to sell this index. Okay, so I want to see price go up for a time being. Okay, in the Nasdaq 100, we can see price has also rebounded, but you can look at the magnitude of the rise. It's nothing as bullish as what we saw in the Dow Jones or even the S&P 500. The market has the Nasdaq 100 actually rebound more than 50%, and now is advancing towards the 61.8% retracement level. Highest traded on Friday was 11,547, and this is definitely, if you want to sell, if you have a bearish view on US equity, maybe this is a good index to consider selling, because it is the weakest among the three major equity index. Okay, now over in Hong Kong, we can see that this morning we have the release of the Chinese GDP number. We have a quarter on quarter. It came in much better than expected. Market was actually very pessimistic going into today's trading, because the early morning we see that the GDP number was released for China on a quarter-to-quarter basis. Market was expecting negative 0.8, but it came in 0. No growth and no decline. So on balance, it is a good number, because the expectation was pretty low and it came in to be 0. So if you look at it from this perspective, then it is definitely a positive number. Okay, but it is without doubt showing us that Chinese economy is definitely slowing down, because on the fourth quarter, there's simply no growth. Okay, although there's no decline based on Q3 numbers, but it's definitely not a good sign. Now, on the year-to-year basis, on an annualized basis, market was expecting a gain entirely for 2022 to be 1.8%, but it came in a lot better. It came in at 2.9%. So this is on balance again a very good number, but it is nowhere near China's typical growth rate. China's typical growth rate is northward of 6%. So this is coming in at 2.9%. This is not great, but it is not as bad as what the market feared. Okay, so but the market did not react. Okay, based on this number. Of course, we also have another number that was released. It was the retail sales for China. Market was expecting a horrible number. Market was expecting a negative 7.8%, but it came in negative, still negative, but negative 1.8%. So on balance, it is not that not a disaster, although it could have been better. Okay, but the Hang Seng and as well as Chinese equity market did not react positively. It continued to slide. Now the high traded on Hong Kong in the Hang Seng Index was 21,947.55, which is we're just a whisker away from 22,000. So we can see that the market is advancing towards a key round number. My target has all the while been 22,118, and which is not very far from the June high of 22,450. So again, we are approaching key levels here. So the market is understandably getting a little bit cautious. Now, when we look at the Shanghai Composite Index, we see the same thing. Despite not a disaster number coming up this morning, the market did not react to the upside. The high traded 3,251.18 was actually registered on Monday, and this is already higher than the December high. This is something to which is a benchmark. If the market can continue to take out the previous month high or the past 2-month high, that is telling us the market is underlying very bullish. Okay, so we can see that since it has taken out the December high, it has given it a little bit of firm undertone. Okay, so going forward, we want to see how the market can actually challenge the September high and ideally to take out the August high, because if you can take out the August high, the entire structure of this price chart here will looks very different, because I will have to eliminate all the pink color box, okay, which signify to me the sellers are in control. Okay, but if the market take out the August high of 3,308.35, then I will be forced to take out all the to remove all the pink color box, leaving only the green, and that means the market has turned positive for the first time since August of last year. So do watch out for this potential flipping of trend. Okay, over in Nikkei, we can see that Nikkei actually have rebounded, but going to yesterday's number, the market was actually on the verge of collapsing. Okay, so from a high of 26,547.6, we can see the market actually have a major fall yesterday. But this morning, for some reason, because again we have to understand tomorrow is going to be the BOJ interest rate decision. So a lot of people has a lot of thinking right now, because 5 days before Christmas, the Bank of Japan actually surprised the market by widening the yield curve, allowing the JGB, which is the Japanese government bonds yield, to actually rise beyond its previous 0.25% cap to 0.5. So effectively, they allow the yield to climb another 100%. So the market now is thinking, because Kuroda, the current governor of the Bank of Japan, is going to retire come April. So I think he has a legacy to protect, and he doesn't want his successor to come in and undo everything that he do. So he wants to there's a very good chance he's trying to normalize his monetary policy before he call it quit. And there is very high chance, because Japan is the only other major economy still maintaining a zero interest policy. So I think at the very least, he will want to remove the current interest rate of negative 0.1 back to something of normal. Okay, go back to zero for a start. So if that's the case, there is a lot of speculation that Japanese interest rate is going to go up. So that is causing the knee-jerk reaction yesterday as the Nikkei opens. Okay, but this morning the sentiment seems to improve a little bit. You can see the more or less a recovery of the yesterday's loss back to where it was on Friday. So we have to see tomorrow's number is very important. Do watch out for volatility in the yen-based assets. Okay, over in the dollar yen, the same factor that's causing the Nikkei to come down is also causing the dollar yen to come down, because if dollar yen comes down, it means the yen is getting stronger. Why the yen need to go stronger? Because of expectation among speculators thinking that the interest rate in Japan have to play catch up because of a likely change in monetary policy by the Bank of Japan. So we can see dollar yen has been coming down very aggressively to as low as 127.22 yesterday before it started to rebound. Upside potential, I think the market will probably be kept just under 129.5, because for every reason, there's no reason to be buying dollar yen right now, because if the expectation is that the Bank of Japan is going to change the monetary policy stance to encourage higher interest rates to be more in line with the rest of the world, then I think the dollar yen is likely to come further down. Okay, my immediate target is 122.35. Not sure when it will be hit, but it does looks like if prices continue to trade within this falling channel, it will eventually get there. Okay, for euro versus the dollar, we can see that the dollar itself has been on the back foot for quite some time now. Since last September, we can see that that allows all other major currencies to actually have a chance to rebound. Not because these other currencies are suddenly have a more optimistic outlook. It's not. Okay, all these major currencies, including the pound, the yen, and the euro days, are definitely having some of the poorest fundamentals. So it doesn't justify higher prices. But because right now the dollar is coming down, so that's why you get a seesaw effect, right? So this rally in currencies is definitely giving us a chance to be able to anchor in at short at higher prices. I'm just going to wait for the price to stabilize and start to show sign of losing momentum. I'm going to sell this other currency and go back to buying dollar eventually. But I think maybe the timing will have to be very crucial. I think for the next 1-2 months, the dollar may still be on the back foot. I think somewhere in April, okay, April, I think this may will be somewhere. I think we can hold long dollar position for quite some time. Okay, now going forward, over in the Aussie, now Aussie is a different game altogether, because this year, I'm also thinking that it's going to be a year for commodities, and Australia being a commodity-based economy, more than services or more than manufacturing, it is a commodity-based economy. So if commodity does well, then that should do also very well for the Aussie dollars. There'll be more demand for Aussie produce and Aussie minerals like iron ore, copper, even food stuff. Okay, so that should work out very well for the Aussie. For the time being, you can see Aussie versus the dollar has been climbing, so they have a different dynamics altogether. Okay, so if the market can actually retrace on a short term back down to 0.6875, that could be a good level to pick up some long position, because it has I'm actually quite optimistic about the Aussie dollars going forward. Okay, now when we look at sterling has more or less the same fundamental as the euro. So you can see that this rising channel, where this purple area is actually a rising channel. The price has been hovering just underneath this midpoint of this rising channel. I have mentioned that this rising channel in previous update acts as something like a resistance line. Okay, yesterday we can see the market actually attempt to cross over to 122.89, but on a close to close basis, it did not quite manage. Okay, so it came under profit taking. So this profit taking may actually extend into today's trading, maybe into tomorrow as well. And if the market can actually push back to 120.60 to 120 even, I think that level will be offering us a good level to pick up some more long position. Not because I believe the sterling is strong, but because I believe the dollar will continue to slide. Okay, now we may look at the crude oil market. Oh no, maybe before I go to crude oil, let me talk a bit about the dollar versus Canadian. Now, dollar has been, like I said, has been sliding down technically. So I think this is a technical pullback, and obviously dollar versus Canadian will also be showing the same phenomenon. Yes, went out to as low as 133.21 on last Friday, and the market right now appears to be wanting to rebound. Okay, so this fits in the scenario in which I think euro dollar and sterling may actually pulls back. Okay, so we probably will see a technical move, and so far so long as it's contained within a three-way structure, I think this corrective outlook will actually play out. So that means dollar versus Canadian have a chance to go up to 134.70 to 135. So if the market can actually go up to this level, look out for sell signal, because I think this slide in dollar may not be over yet, and there's a very good chance it will retry this level at 133. Okay, now go to crude oil. Now, crude oil actually managed to rally up to above $80 per barrel, went up a high of $80.22. Then, of course, this is, of course, the electronic trading session for NYMEX WTI crude oil. It went up to $80.22, although the US market was closed yesterday, but the electronic trading platform was open. So this high was not supported by volume, so you can see the price has been struggling. So I have a sense that price may be under a lot of pressure right now. There is a good chance you may break this very acute support line here. So do look out for further weakness in crude oil prices, because natural gas has not found a bottom yet. There is a good chance it may have already done so as of the last 24 hours, but it's still very tentative, because unless natural gas can stabilize, crude oil prices have very little upside potential. Okay, even with the reopening of China, that should theoretically create more demand for energy products. So that will by extension means higher energy prices, means higher crude oil prices. But technically, I think the market is right for a pullback. So let's see how much, if ever it pull back. Okay, look for levels to go long again. Okay, in the meantime, do not short this crude oil, because there is no reason to sell it. And definitely at this current price, looking at the way it struggled, it is definitely not the best price to go in and buy now. Okay, so wait and see is probably the best move. Okay, as far as natural gas is concerned, natural gas, this is a 4 hours time frame. Market went to a low on Friday, late Friday trading, went down to $3.38. Okay, and then it bounced back. So it may be a bit tentative, but if you look at the daily time frame, okay, there's no buy signal yet. Okay, there's no buy signal. So I'm a little bit concerned about this move here. On a week-to-week basis, maybe I can see something may be happening. If by the end of this week, the market can close above this level, which is the previous week closing price, not last week, the week before, which is $3.71. Now, $3.71 now becomes my trigger point. If by the end of Friday's trading, we see natural gas close above $3.71, I think that will be my sign that the bottom is in place and getting ready to reverse. Okay, so by then, if we can get signal in the crude oil on the buy side, I will take it. Okay, so by this natural gas need to stabilize. Okay, over in oil prices, gold prices, we can see gold when it continue to charge higher to $1,929, almost $29, and it also appears to be losing some steam. This is a level that I'm not comfortable buying. I just also cannot be selling. So again, very similar to what I'm thinking for crude oil. Wait and see. Ideally, we get a more reasonable pullback. I think a pullback back to $1,870 would be a reasonable level to consider buying the gold again. Okay, but again, we have to watch. It may not even retreat, because so far it does look like it wants to go up. So we have to watch this like a hawk. Okay, over in silver, we can see that on last Friday there was this attempt to actually rally. Market went up to 20 sorry, this is on Monday yesterday, which is $24.50 thereabout, almost challenging the month high, which was early part of this month. Okay, $24.55. So we want to see silver prices may not retrace a lot, but I would like to see that there is a significant pullback. Okay, so far it is trading within this rising channel, and if this rising channel continues to be very much maintained, the last time it did was this price here, which is on January 11, which is last Wednesday. Market actually attempt lower, but it closed with a reversal signal to the upside. Okay, so looks like this silver may not come down very much. Okay, but I would love to buy it if it does. Okay, now over in the crypto space, you can see over the weekend, there's a major bump up in prices across the board. Bitcoin yesterday, or rather this morning, created a new high for this month itself after picking up 21,000. The highest traded was 21,462, almost $463. And there is potentially a cap here. Kind of when we look into the daily time frame, you can see last November, 21,484.6 is actually the high point. So now based on this morning high price at 21,462.3, almost 463, you can see that it's getting very close to the November high. So be very careful about the current level. Definitely not a good level to buy unless the market can punch through the 21,000 for let's say 500. Okay, only on that basis, then maybe it will cause another surge in prices. But if not, then I think the market could be vulnerable for a pullback. Okay, we have to see how this very acute support line behave. If it breaks, then near term, I think it will continue to slide further. Okay, but based on the price chart, we can see that all across the board, we can see for some reason, cryptocurrency has gain some seal. Okay, there's some momentum behind it. Largely, again, it's all related to the Federal Reserve expectation pivot. Okay, because of the CPI numbers that we saw last Thursday, they have caused most participants to come out with the idea, say that sooner or later the Federal Reserve will have to stop hiking interest rate, and that is definitely good, because if they start to cut interest rates, it will make capital and credit available. And then if that's the case, then that could also be something that is going to be working out for risky assets, including cryptocurrencies. Okay, so for Ethereum, you can see the high traded this morning was 1,607, no, $1,604 thereabout, and it has been pulling back. Okay, so we will have to watch how far it can go. Okay, over in Ripple, okay, Ripple appears to be not as bullish currently, because this morning it doesn't have a new high. This high at 41 cents was actually created over the weekend on Saturday. So we can see prices may actually be doing a three-wave pullback. Now this morning itself, it has, yesterday it has a very preliminary pullback to this level at about 0.38 cents. So we can see how the market is behaving. If the market can continue to dip further into this bracket of prices between 0.37 to 0.3775, I think do look out for potential buy signal within this area here. Okay. Now over at Cardano remains very well bid, and of course very similar to Ripple. We can see that the market has not traded a new high this morning. The high so far was actually traded on over the weekend at 0.37. So it is also likely to do a three-wave pullback, and the market can go down to somewhere between 0.332 cents to 0.322 cents. That could be an area of opportunity. Market may even go as deep as 0.308, okay, which is this leg here. Okay, so by and large, this market does look very, very firm. Now, what is not looking to pull back very much is actually this thing called Solana. Solana, on balance, although it looks very remarkably similar to the Cardano price action, but we can see there is a new high traded this morning at $25.02, which is something that Cardano did not do. Okay, so based on the pullback so far, it has been very, very shallow. So I'm not very optimistic we can see a very deep pullback. At the very, very most, I think if the market can pull back, will be $21. So if the market can do $21, consider it to be the best it could do, okay, based on the current firmness of this particular token. So there you have it. I do not have anything to add at this moment. I will see you tomorrow. In the meantime, do take care. Remember, tomorrow, major events, we have the Bank of Japan's interest rate decision, and of course tomorrow we also have retail sales for the US. So again, watch out. Okay, watch out. Bye bye. Take care.